My name is David Slepak. I'm the Chief Marketing Officer here at StenTam, and I'm the host of today's show. I'm joined today by Ron Whaley, Managing Director of StenTam Tax Services. Ron, thank you so much for joining us today. I'm excited to learn more about StenTam Tax Services and important thoughts for business owners to consider around corporate taxes. So, Ron, why don't you take a moment and tell us a little bit about yourself and your background and why you're here today.
Okay. Well, basically, I've been a CPA for over 43 years, and I've worked with high net worth individuals, partnerships, businesses, ranging in size from a small sole proprietor up to multi-billion-dollar international corporations. And have a lot of experience in taxes as well as M&A and other areas that affect a lot of our customers.
Well-versed in kind of general tax services, which is fantastic. You know, I'm very interested for our audience of small and mid-sized business owners. What are the three most important things that you would think about from a CPA's perspective, right? When speaking with business owners?
Well, the first one would be if you're looking at a CPA or you're looking at a tax preparer, you need to make sure that the people you're working with or that you're considering are qualified, that they've got enough experience and they're focused on your type of business and that they care about your business. And then secondly, you really want to make sure that the company, the CPA firm that you're talking to, is focused on technology. The world's, as we all know, a very fast-paced, changing all the time type of environment. Tax law is changing faster and faster every year, and Congress is having a penchant for actually making tax law retroactive, which is something they never would have done 20 years ago, but they're doing it now. So you need somebody who's leveraging technology, is using state-of-the-art software and systems to facilitate the work they're doing for you. And then you want to work with somebody who actually cares about your business. There are a lot of great firms out there that crank out lots of returns, and they're focused on just cranking out returns. But if you're a business owner, you really want somebody who knows your business and is planning ahead for your business and not looking back. But they're thinking about your business today, tomorrow, next week, next month, and how is this changing world impacting your business from a tax perspective? What can they do to help you grow your business and, more importantly, save money?
Makes a lot of sense, Ron. You know, we had talked part of the podcast starting a little bit about AI, and you know that's all the rage right now. You know, Chat GPT, this and that, and AI. Help me understand. You know, is this creeping into tax preparation and CPA services? What's up with that?
It's creeping into tax preparation, but not near as much as it's impacting tax research. We all know how much data there is in the world. I mean, you can turn on the news and you can find out the news about anything anywhere in the world. Well, the same is true about taxes. Taxes are changing all over the United States. Every state has activity going on at one point in time. So it's very difficult for a single practitioner, one CPA firm person, to try and stay ahead of any of that information. We leverage artificial intelligence to sort through all the tax publications, all the articles that are published every day, and use AI to help focus on information that is impacting our clients so that we can keep ahead of things as opposed to reacting to something that happened months ago. That may have been a better planning opportunity if we had talked to one of our clients when it was underway, when they could plan for it and maybe make changes to their business that would make it even more attractive to them.
Interesting. You know, Ron, that you've mentioned a couple things that kind of stood out to me, right? Obviously, technology is important. You mentioned some things around being proactive, right, and forward thinking, and I'm guessing that leveraging technology, AI, but also that kind of continuous relationship. Can you help me kind of understand in our audience kind of the difference between kind of reactionary and being proactive?
Well, I describe it, and I hate to use the term because it's a much maligned word in today's business environment, but I believe that we work very hard to be partners with our customers, to understand their business so that we can be forward thinking and forward acting on their behalf as opposed to reactionary. We want to talk to our customers on a regular basis. We want to be out there giving them ideas all year long, not April 15th. And we said, well, if you had done this last January when this law was enacted, you could have saved another X number of dollars. You need to know your clients and they need to know you so that hopefully as they're considering transactions, they say, well, we should run this by the CPAs just to see. Maybe there's something we can do that'll save a few dollars by taking a few minutes and talking to them because they know our business. So that's where you need to be proactive as opposed to reactive. Technology helps with that. Having qualified people is even more important.
And probably kind of regular check-ins, right? I mean, it sounds like, meeting with your CPA on your business once a year is kind of a failed strategy.
It is, and we incorporate all of that into pricing, where if we're doing your tax return, we're providing you with 12 months worth of tax advice, tax planning, and we're thinking about you for the next 12 months because that's what you really need. You need to get that return filed, but then you need to have somebody who's looking at that return and thinking about it and thinking about your business and giving you those opportunities to get ahead of the next big tax change.
Interesting. One of the things that we're hyper focused on here, obviously at StenTam, is ERC, the Employee Retention Credit. It's all over the place these days. Great opportunity for small business, right, to leverage a refund. And what are your thoughts as a CPA? You've been around for quite some time. What are some of the important things on the ERC program and things that you're seeing, and some advice, right, to our audience today?
Well, the main advice I'd like to give our audience today is ERC was created by Congress to help businesses recover from COVID. It's not some scam. It's not something that some charlatan made up, even though it appears that the IRS would like people to be scared into taking advantage of it. Why they've taken that approach, I don't know. Now, ERC is extremely complicated. You want to make sure, as I said before, that you're working with qualified people who understand ERC and can get you the maximum refund. But people should not be afraid of it. They need to align themselves with companies like StenTam, who are experts in ERC and experts in tax for that matter, so that they can get the maximum dollar amount, because that's what Congress intended. It's a very complex calculation, though, and it doesn't end with filing or getting your money back from the government. In fact, when you get your money back from the government, you're about at the halfway point, because after that, you need to file amended returns for the tax years that were impacted by you getting a credit. And for most taxpayers, that's 2020 and 2021.
So the ERC is an amended return on the payroll taxes, right? Mm-hmm. And kind of to complete that process, there's an amended corporate return as well?
Corporate return and potentially an amended individual return. A lot of our clients have flow-through entities that allow to not pay taxes at the corporate level, but all tax liabilities and benefits flow through to the individual shareholder. So it could impact both. But we do that all the time. We're experts on it, just like the ERC side of our business is experts in getting you your refund. So we're happy to work with our customers, just getting that done. And at the same time, like we do with everything, we take a full service, full view of the returns. When we go back to amend the returns, we're not interested in just amending your return and getting it out the door. We're interested in looking at the return, understanding it, getting a better understanding of your business to think of other opportunities where maybe there are other credits that you're not even aware of. We have customers that are taking advantage of research and development credits that they didn't know they were eligible for. So we use it as an opportunity to provide full service and a caring approach that means that we're more than just transaction-oriented. We're really relationship-oriented.
That makes a lot of sense. So, for our audience, and you mentioned some things around corporate and personal returns, I'm assuming that a lot of it has to do with business structure. So maybe you can kind of walk through an example of where a business owner, right, has filed for ERC, filed their 941X for their payroll taxes, and then subsequently their business structure is in a way that would require them to do both a corporate and a personal return. How would that look? What's that organization look like?
I was looking at, and this can take a variety of different corporate forms. It could take a LLC form. It could take a subchapter S form. I was looking at a customer the other day that has a partnership. And so they filed for the ERC. We have to go back and amend the partnership return, but that partnership has 70 partners in it. So each of those 70 partners needs to amend their tax return. And people may think, well, that's a lot of work. I'm not going to do it. But we're talking oftentimes hundreds, tens, if not hundreds of $1,000s in refunds. And from my perspective, those are taxes you've paid. And even though the IRS may want to scare you away from taking that money back, this is an opportunity where Congress said, we need to give some of this money back that we've already taken out of our taxpayers' pockets. And if you don't take advantage of it, well, that's just sad, you know.
Makes a lot of sense. Yeah, makes a lot of sense. You know, it's interesting when we kind of think about small businesses and this whole process of kind of forward thinking, tax returns. What are some of the other tax credits that you see in the marketplace today that, as you're looking at returns, that the business owners should be thinking about?
Well, the one that we see a lot of activity in right now is research and development. And that's because historically, when that law was first passed, most people thought of it as being for high technology companies, for chip makers, or for pharmaceutical companies. And they never thought about it again. But Congress has continually been changing those rules and regulations to make it so it applies to almost any business. I mean, I've seen it used in breweries. I've seen it used in restaurants. I've seen it used in all kinds of manufacturing facilities where people are always improving their business. And sometimes they just need an expert to sit down with them and talk, not with tax language, but in an understandable way to understand their business and say, all those improvements you made to your manufacturing machine last year, that is actually research and development. And if you're doing that on a regular basis, you're leaving money on the table every time you file your tax return.
And I think, you know, as I listen to you talk about some of these credits from a proactive perspective, if a business is looking to improve processes, is looking to expand, their product offerings or develop new products. I mean, the government is spurring innovation, right? I mean, they're helping these businesses. It'd be crazy for you not to be proactive in that approach and learn about how your business may, in the future, take advantage of these types of opportunities as well.
And that's exactly right. And this is a situation where Congress has actually listened to its constituents. When the regulations first came out, R&D credit was very complex. And as I said a few minutes ago, most people only thought it applied to biomedical or technology companies. But Congress listened to their businesses, and they understand that small mom and pop operation has to innovate constantly, has to change and look at improving their processes so that they can keep ahead of the competition. And they wanted those people to benefit from the same credits that large multi-billion-dollar corporations have been taking advantage of for years.
You know, that resonates obviously with me as our mission right here at StenTam is really about helping those small and mid-sized organizations, achieve enterprise level results, right? So, the folks at Google or Amazon or whomever, I mean, they have hundreds of people thinking about these things and providing support services internally on a daily basis, I'm sure. But being able to bring that level of thinking, that level of support, proactiveness, technology, compliance to, our clientele of small and mid-sized organizations is really something that's important.
Well, and that's what's important for all businesses. I know oftentimes it's overlooked, but there will be businesses that will miss out on ERC because they didn't hear about it. Somebody didn't talk to them about it. Their tax preparer might not have brought it up, and they're going to miss out on it. And so basically they're paying taxes or not getting refunds of taxes that they're legally available to them.
Sure.
That Congress specifically created to benefit them. And to me, that's just, it's a crime when when we don't take advantage. The government doesn't ever hesitate to take money out of your pocket. And if they're offering to put money back in your pocket, you really should take advantage of it.
That makes a lot of sense. Well, Ron, thank you so much for joining me on this podcast today. If you would leave our listeners with one thing to walk away with today, what would that be?
Always, whenever you're looking for a CPA, you really need to invest some time in making sure you get the right professional, that you're aligned with the right organization, so they're doing what they're supposed to be doing for you, which is working for your benefit 12 months out of the year, not just when you send your tax information to them and hope that they get the return to you in time to file it. You want somebody that's going to be there year round and is thinking ahead, thinking about how to save your business money. You wouldn't leave money on the table if you were negotiating a raw material contract. So don't leave money on the table by choosing the wrong tax preparation service.
Ron, makes a lot of sense. Hey, thank you so much again. Hey, that concludes our podcast for today. Stay tuned for next week as we investigate more topics around small and mid-sized organization businesses.